The impact of global wars on the economy, destruction, transformation, or rebirth. Just imagine. You wake up one morning and the headlines are flooded with breaking news about war. Stock markets are collapsing. Gold prices are skyrocketing. Oil prices are swinging wildly. People are rushing to banks in panic. So when war begins, is the first thing affected really the battlefronts? Or is the first real casualty the sense of trust in the economy? Today we will examine the impact of global wars on the economy. But we won't only touch on historical events. We will analyze the economic mechanisms that trigger these events. Who won? Who lost? Do wars really stimulate certain economies as often claimed? Or is that belief merely an illusion? Are you ready? Let's begin. The first shock of war, the collapse of confidence. When a war begins, its first impact is not physical destruction. The first destruction occurs in confidence. An economy is fundamentally shaped by expectations. If the future inspires confidence, people invest, spend, and most importantly, produce. But wars make the future unpredictable, wiping out that sense of security. Take World War I as an example. When the war was declared, European financial markets shut down for weeks. The London Stock Exchange suspended all trading. The panic threatened the collapse of the entire financial system. At this point, let me ask, why do general stock markets fall in the days following the outbreak of war, while defense company stocks often rise? Why do investors shift their money into safe haven assets like gold? The key driver is risk perception. Wars increase economic uncertainty. Rising uncertainty pushes investors away from risky assets toward what they perceive as safe havens. That's why gold, the dollar, and government bonds often appreciate during wartime. But this is only the beginning. State intervention. The war economy. War almost inevitably leads to direct and powerful state intervention in the economy. Under normal conditions, the free market operates independently. But during war, production is planned. Prices are controlled. Resources are prioritized. Private sector activities fall under state direction. This is known as a war economy. World War II is a prime example. Before entering the war, the United States had not fully recovered from the Great Depression. Unemployment was high. But once the war began, factories rapidly shifted to military production: tanks, aircraft, ammunition. Unemployment fell dramatically. So what does that mean? Do wars truly revive economies, as some argue? Or is this what we might call growth through destruction? We need a deeper analysis. Although wartime production increases rapidly, the goods produced are not consumer goods. They do not improve living standards. The entire output is dedicated to sustaining destruction. Even if GDP rises, this does not necessarily translate into greater prosperity for society. Economic data may show growth, but factories are producing more destructive power, not improved well-being. Money printing and debt, financing. Wars are expensive, extremely expensive. Feeding soldiers, producing weapons, maintaining logistics, tax revenues alone rarely cover these costs. So what do governments do? They borrow, they print more money. Post-World War I. Germany is a dramatic example. The cost of the war was so overwhelming that Germany printed money to meet its obligations. The result was hyperinflation. The currency collapsed. People had to carry sacks of cash just to buy bread. So we must ask, is the true economic cost of war paid on the battlefield or afterward? Often, the deepest destruction becomes evident after the war ends, through massive debt burdens, damaged production capacity, and the loss of human capital. Does war accelerate industrial and technological progress? Here's an intriguing point. Wars often coincide with technological breakthroughs. Radar, jet engines, nuclear energy, even the foundations of the internet, many originated in military research. The Manhattan Project, for instance, was designed to build the atomic bomb, yet it paved the way for the nuclear energy sector. This raises ethical questions. Why does humanity accelerate technological progress, primarily through war? Why is the same urgency rarely seen in times of peace? War forces governments to mobilize resources quickly. Bureaucracy shrinks, decision-making accelerates, R&D funding flows rapidly. In that sense, war produces compelled innovation. But at what cost? Global power shifts and economic leadership. Global wars reshape not only economies, but economic leadership. Before World War I, London was the world's financial center. Afterward, economic gravity gradually shifted toward the United States. Following World War II, the U.S. emerged as the undisputed global leader. The Bretton Woods system was established. The International Monetary Fund and the World Bank were created. The dollar became the global reserve currency. So let's analyze. Do wars merely destroy, or do they create entirely new economic systems? If a new global conflict erupted today, would economic leadership shift again? History suggests that major wars accelerate systemic economic transformations. Inflation, scarcity, and social tension. During wartime, supply chains break down. Agricultural land suffers, trade routes close, energy costs rise. The result? Inflation. After the Yom Kippur War, the oil crisis pushed the global economy into stagflation. Oil prices surged and production costs skyrocketed. So we must ask, how fragile is an energy-dependent global economy in the face of war? Is energy security even more critical than military security? Today, energy routes, shipping lanes, and supply chains are strategic targets. In many ways, the economy itself has become the front line. Post-war reconstruction, the Marshall Plan war destroys, but reconstruction can spark economic expansion. The Marshall Plan is a significant example. After World War II, the United States provided billions of dollars to rebuild Europe. The result? European economies recovered. New markets emerged for American goods. U.S. political influence expanded. So consider this. Was the Marshall Plan humanitarian aid or a strategic investment? Do post-war economic assistance programs create new forms of dependency? The economic outcome of war is not only destruction, it is also geo-economic strategy. War and income distribution. During wartime, income distribution shifts. Defense industries expand. Government contracts multiply. Some sectors grow wealthy, while civilian sectors shrink. After World War II, major corporations in the United States gained significant strength. So what are the long-term effects? Do wars increase inequality? Or does state intervention sometimes lead to fairer redistribution? History presents a complex picture. In some cases, the welfare state strengthened after war. In others, the military-industrial complex expanded. The possibility of global war in today's world. Today's world is more interconnected than ever. Supply chains are global. Finance is digital. Energy systems are interdependent. A modern global war could have far more devastating economic consequences. Let's ask, in the event of a global war today, how would internet infrastructure, financial systems, and cryptocurrencies be affected? Are wars now fought with tanks or with sanctions? Economic sanctions have become powerful weapons. The economy is no longer just a consequence of war. It is a tool of war. Conclusion. Does war grow or destroy the economy? Let's return to our initial question. Does war develop the economy? In the short term, some indicators may show growth, but in the long run, war destroys human capital, increases debt burdens, fuels inflation, damages social structures. True development often occurs during reconstruction, not destruction. Here's the critical question I leave to you. Why does humanity so often experience economic progress after devastation? Can we not mobilize the same determination in times of peace? Or is the economic system inherently reshaped through crisis and war? My analysis is this. War does not develop the economy. War reshapes it. There may be winning nations. New leaders may emerge. New technologies may be born. But overall, for humanity, the economic burden of war far outweighs its benefits. And perhaps the real question is this. Do wars break out because we fail to manage economic competition? Or is war the harshest method of reconstructing the economic order? In the next episode, perhaps we should explore, do global economic crises cause wars, Or do wars cause economic crises? Which comes first, in your opinion? I'm curious about your thoughts. Feel free to share your ideas in the comments. For more videos, you can support me by subscribing to my channel, sharing, and liking my content. Thank you.